Welcome back to Markets Today. It was a choppy day on the markets. Every time the Sensex and the Nifty tried to rise above yesterday's closing levels, it was faced with several bouts of selling, as you can see, and the markets have ended about 0.5% lower. Not so for the mid-caps, however, which ended 0.5% higher, making the advanced declines numbers, the number of gaining stocks, outstrip the number of declining stocks. So, confusing day. Let's get the technical expert in. Sudarshan Sukhani is with us. Sudarshan, what did you make of the day's play?
Good evening. Well, markets had a dull day today. There was a lot of intraday choppiness and the end result was weakness. But a much bigger point is now emerging. For the last 2 days, the markets really are in a range that is between 8200 and 8300. So with all the choppiness, the markets are now locked in a range, and a range almost always leads to a big move either on the upside or on the downside. Therefore, for tomorrow, which is F&O expiry day, and for the subsequent days, we now have benchmarks. While the trade currently is to be on the short side of the market, we should now move our stops to 83.10. If the Nifty goes above 83.10, we get out of our short positions, and if it sustains above that level, we might even consider a quick 1 or 2 day long position, just a quick position. That's for the trader to consider. If the Nifty breaks 8200, then the sense is that the decline is likely to persist and go much deeper towards 8000. So if you have, and you should be having short positions, protect them with a stop at 83.10, and also consider adding to your positions, or rather buying above 83.10 and selling below 8200. Markets are volatile and choppy, so the trade is to be very careful and keep low volumes.
Okay, fair point, Sudarshan. It's going to be a tough day, especially tomorrow. But what about individual stocks? Give us some sense in case you're betting on something specific.
Well, a lot of mid caps are now cracking and giving us a sense that lower levels are coming. For tomorrow, professional traders can consider going short in Tata Power. Tata Power is making some kind of a descending triangle that suggests that once the base is broken, lower levels are coming. It's on the verge of breaking the base on the downside. Always please keep the stops because markets are choppy and volatile and can do anything. But the trend in Tata Power is very clearly on the downside. Trade carefully.
All right. Thanks, Sudarshan, so much for that. Let's move on to another sector that was in focus today. Sugar, as a sector, has been crying out for help as prices have been plummeting, and the arrears to farmers have touched a whopping 21,000 crore rupees. Now, in a bid to tackle this crisis, the Union Cabinet today announced 2 major steps. First of all, import duty has been hiked to 40% from the earlier rate of 25% to prevent the influx of cheap imports of the sweetener into the country. And also, full excise duty exemption has been given to ethanol, which is used for blending with petrol. But many believe that these measures are not going to be enough to tackle the current crisis.
And now we bring you a very special person, Ashish Goyal, an ace trader at a hedge fund called Blue Crest Capital Management, hailing from London. Here's a slice of the conversation that we had with him earlier in the day. And while you hear him, do watch him closely and his achievements that we are running by.
If you put India on a relative basis as compared to what's happened across the world in emerging markets, India is a clear outperformer. I mean, you can leave China aside because Chinese equity markets do their own things most times. On the bond side, on the currency side, on the stock side, India has clearly been the outstanding trade for the last year and a half, with all other emerging markets being quite significantly weaker. I think there are 2 things. One, India cannot stand alone if there's a massive global anti-EM sentiment beyond a point. And secondly, I think the transition that people were hoping for takes time, because we've come from a very long period of poor performances, both on the government side and on the economy side. And that takes time to turn around.
Which will be the inflection quarter as far as earnings growth are concerned? Since, you track fundamentals, the slew of earnings that we have got, and we've got just maybe 1/4 of the earnings due, all of them show very poor top-line growth, even those that have shown, margin improvement.
This year is going to be the transition year. I can't give you a specific quarter, But you're actually seeing underlying growth pick up already. If you look at production data, you look at capex, you look at consumption, that's started to pick up on the ground. And with the macro factors improving, like inflation being under control, a current account coming in quite a lot, I think things are ready, and the government is trying to give the right impetus.
Okay, so that's a very special view coming in on the markets today. Before we go, we would like to thank all our viewers for helping us maintain our status as India's leading business channel. According to the BARC ratings for television viewership, CNBC TV 18 leads with 48% of market share in the All India NCCS AB target group.
Well, those are the key cities that matter, and All India champion with 48% of viewership. Thank you very much, viewers, and thank you very much for watching this edition of Markets Today as well.